So liabilities and bonds. This is pretty easy, guys. If you guys don't remember what current liabilities are, a current asset, current liabilities, anything under a year is current asset, current liabilities. Long-term assets, anything over a year. So, for example, in this question, it's asking what are the current liabilities. Current liability is going to be things such as account payables. It's going to be notes payables, possibly if it's less than a year, but it's not. Sometimes there are notes payable that are less than a year. Bonds payable most likely won't be a current liability because bonds are longer term debt. And so the accounts payable could be 1,000. Customer advances 10,000, and the sales tax payable 5,000. So the total current liabilities 65,000. So the journal entry, let's see. How about record payment of the note? Sure, why not? Let's do a journal entry for the, what is it? So let's say that it's a notes payable, right? NP. So if they borrowed, if a company borrows money, they'll receive cash first. This is very simple. Let's say we receive $1,000 in cash. Notes pay, and it really depends. Like for example, there might be like for notes payable. There might not really be one. You'll most likely see discounts or premiums on bonds. So you most likely won't see a type of discount. For example, if there is an accounts payable, there's this thing, what is it? 210 net 30. So if they pay within 10 days, they get a 2% discount. Otherwise, they have to pay within 30 days. Or a lot of times it could also be net 45 days. So they would want to pay within 10 days if they want to get the discount. So depending on, for example, if you would write this in at a gross or net. So like if you were going to write this in like as a net, the net amount that you would receive, like assuming that there was going to be a discount. So 1,000 times $20. So, well, you would receive the full $1,000. Well, actually, no. What is this? 9,980. I mean, let's say that you receive a full amount of $1,000 cash. You write the net the accounts payable at 9,980. Okay, and then there will be a discount of $20. Okay, but let's say you didn't pay. You forfeited, right? So you forfeit the discount. Okay. So like let's say they paid it, right? They repaid so the AP at the payment date, the date of payment, repayment 980. But then the thing is the discount has been forfeited. forfeit a discount because they paid after 10 days. So 20, and then you would have to pay cash 1,000. So you have to pay full amount of cash. But if, for example, they did in fact get the discount, then the AP, what is it? 1,000. Oh, no, 980. Cash. Oh no, AP 1,000. Cash 980, and then discount 20. But depending on whether it's net or gross, you guys would write it in different. So that's how you would journalize AP. If it was notes payable, a lot of times there's not going to be a discount or a premium on, or a premium on a note. You'll most likely see a discount or a premium on a bond. Let's see, unearned sales revenue. So this company received $24,000 in advance for services. So what would happen is there would be unearned sales revenue. Let's see, of 20,000 or 24,000, and then this would go into sales revenue. This would come out of sales revenue. All right. And then on the day, that's when they receive the payment. But on the day of, on the month of, for example, of the month of the revenue, most likely you'll see sales revenue. Sales revenue 2,000, and then it would be credited out of unearned sales revenue. So that's probably it. Unearned sales revenue. Oh, it's not. Okay. Sales tax, is it maturity of the debt? Debt maturities. So like, let's talk a little bit about, well, let me make this another video.